Hello and welcome to Pro Trader Strategies Market Commentary for Friday, January the 27th. My name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these daily market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. We've got some pretty important economic data coming out here in the United States, not so much across the pond, so let's talk about here in the United States. First off, we got advanced GDP numbers came in lower than expected at 1.9%, expected to be 2.1%. Now, the caveat with the advanced GDP, there's three of them. There's advanced GDP, preliminary, and then final. Final being the end-all, be-all, but advanced is the one that comes out the earliest, so it's the one that is more widely looked at and traded the most. That one coming in a little bit lower than expected is kind of throwing a little bit of a wet blanket on the equities right now. Then we also got advanced GDP prices, came in line with expectation at 2.1%. Then on to durable goods, we got core durable goods came in at 0.5%, expected to be 0.5%. Core durable goods excludes transportation. So with the durable goods orders number came in at negative 0.4, expected to be a positive 2.7. So that again adding more of a wet blanket onto the overall markets, just not looking too good there. Then we also got University of Michigan consumer sentiment came in at 98.5, and inflation expectations for the University of Michigan came in at 2.6. Not really widely looked at on the inflation expectations for University of Michigan because it's more of a survey of individuals, what they feel. So both of those being the retail person out there. So those really aren't super widely looked at. Consumer sentiment could indicate that a consumer is feeling good about the economy and therefore wanting to spend. So that's why we kind of look at that one a little bit. But the core durable goods and the advanced GDP numbers not looking so great today, and that is causing the overall equities to come off as well as crude oil. Crude oil right now is down on the day, back below this line in the sand we talked about, tried to pierce above there yesterday and settle above there. It really kind of settled right on it for all intents and purposes. Today, again, the bears taking control of that, giving up almost all of yesterday's gains in crude oil and back below that value area high. Then on to the gold market. Gold kind of trying to hold up here with the market coming off in the equities. Gold's going to get a little bit of buoyancy, if you will. So it's started to come off of its lows as we started seeing these economic data points come out. But gold's still down on the day by about $5, $4.70 right now. The bonds, after yesterday making a nice bottom, the overall equities kind of made it look like they were getting to a tipping point to the upside. Bonds, same thing, making this hangman doji, if you will, at the bottom, creating a somewhat of a bottom here. Today's looking like a confirmation to at least upward momentum in the bonds. Bonds up 11 points on the day. Dow Jones Industrial Average just now looks like it's going in negative territory. It was positive when just a few minutes ago, but Dow Jones down just over 7 points after yesterday's historical high settlement, again above that 20,000 mark. Today still staying above that, but showing a little bit of a kink in the armor with those economic data points. The Nasdaq on the flip side has started to come out of negative territory as the Dow Jones started slipping a little bit, but the Nasdaq up on the day by 5 points. Then on the E-mini S&Ps, they're probably the worst performers as of yet, down 4 points on the day, and that's in percentage terms, I should say, and below yesterday's low right now. Let's look at the 15-minute chart of the E-mini S&Ps. As you can see, this is when the data points started coming out on the open, really started sliding to the lows, which is where we are right now. This is got a couple of bottoms here on the downside, looking like it's acting as support. It's basically looking at this value area low from a couple of days ago. That's acting as quite a bit of support. Then on to a couple of things that I've done. Adobe, I took off yesterday. I decided that I just really didn't want to play around with this one anymore. I got that big move, which we talked about in these butterflies, and it was on the Put Butterfly webinar that I decided to put this on. Got the big move right away is what we wanted. Didn't quite get to that 25% of my profit on that one, but because I got that big move, it started coming off. I decided to pull the ripcord on this, beat the probabilities in rather a couple of days. So decided to take it off. You could probably take it off a little bit better than I did even. So I had on the February 100, 110, 120 put butterfly in there, and I originally sold it for $6 and about 30 cents in there, covered it for $5.53. So I would have liked to at least gotten about $1 or so out of that one, but because of the way the market was reacting and I got that quick move, beat the probabilities, I decided to pull the ripcord on that. You know, nobody ever went broke by taking profits. Then on to Microsoft. I tweeted this out yesterday late in the day. I kind of forgot to tweet it out, so I tried to get it done really quickly right before the end of the day so you guys could take part in that. And I think I hit it when I hit send and I heard the bell go off, but I was scrambling to try and get these trades on. Microsoft I put on first, so I was ready to go, but I'll talk about what I did with Google here in a minute. But in Microsoft, I did the February because there wasn't a whole lot of premium in the Januaries, and I was going to go a little bit closer to what the market maker move was. So I decided to go into the February knowing that I would still get some volatility crush in there, and sold the 60, 68 strangle. So I sold the 60 puts and the 68 calls to create that strangle for 82 cents. Was able to buy it back today for 20 cents. When we got this volatility crush is what we want to see after those moves. It was inside my market maker move. I should say the Microsoft's move was within that market maker move. I was just outside of that, so was able to capitalize there. Then on to Google. So what happened with Google was I had done the Microsoft first, left up the February montage. So when I flipped over to Google, I was kind of scrambling. Actually went into the February and sold the 770, 890 strangle in there and collected $6.40. I thought that was a great price for that, obviously. And then when I hit the send on it, I realized, oh, you're in February. You kind of wanted to be in the January for these, or at least look at it. But it all worked out. I ended up covering that part of my strangle for $2.35 today. And also in the January, I went into the January, sold the 770, 890 strangle as well, and originally sold that for $1.70. Right now, I'm continuing to work that for nickel. Doesn't look like I'm going to get it. I might just hold on to this trade and let it expire worthless. I don't know if I really want to pay up. I've kind of played around with moving that around up to about 8 cents. Still didn't get hit, so I lowered that price back down to 6, and I'm just going to kind of let it work there for the rest of the day and see if I can get hit if somebody comes in to get out or something. So I'm going to let that work a little bit longer. That's all I got for you guys today, other than this afternoon we're going to be doing a webinar on the long call butterfly. So we're going to be taking advantage of high implied volatility in some of these different underlyings and wait for it to kind of contract and come down into a trading range similar to what we've seen in the E-mini S&Ps and things of that nature, where we're kind of trading sideways there. All right. So go to protraderstrategies.com, sign up for that. And if you can't take that, take it easy.